Hello everyone, welcome back to this week's Technical Insights. Global stock markets had a breather last trading week as US softened its tone on the trade tariffs. Last Friday, Time magazine published comments from Donald Trump that said he would consider it a total victory if US has high tariffs of 20 to 50% on foreign countries a year from now. Donald Trump said he expects many announcements on the deals to be coming in the next 3 or 4 weeks. This led investors to price in that we may have reached peak tariff scenario and things may now turn out more positive going forward. The Dow Jones Industrial Average managed to close 20 points or 0.05% higher last Friday to finish at 40,113 points. S&P 500 gained 40 points or 0.74% to end at 5,525 points. The Nasdaq Composite was the best performer last Friday among the 3 US indices, adding 216 points or 1.26% to finish at 17,382 points. Alphabet rose 1.5% after they reported a positive Q1 result that beat analyst expectations on the top and bottom line for the first quarter. Q1 earnings will likely show no impact of tariff, with 6 out of 11 sectors expected to post growth. Tesla also jumped 9.8% to lead the Magnificent Seven names higher, while chip giant Nvidia advanced 4.3%, the best performer in the Dow Jones Index. For the trading week, the Dow added 2.48%, while the broad index S&P 500 rose 4.59%. Tech-heavy Nasdaq Composite jumped 6.73%, and all 3 US indices notched their second positive week out of 3. In Asia, Hong Kong and China stocks climbed on Friday as well, registering their second consecutive weekly gains as US and China both softened their attitudes towards a full-on trade war, giving investors some relief. Gains were pretty much broad-based, with tech and consumer sectors as well as property stocks leading the Hong Kong indices higher on hope of more stimulus ahead from the Beijing administration. The Hong Kong index rose 70 points or 0.32% to finish at 21,980 points. The Hang Seng Tech Index gained 7 points or 0.14% to end at 4,982 points. China has said that there were no talks with US on a potential trade deal yet, after US appeared to soften its stance on trade relations with China. Hong Kong shares of chipmaker SMIC and Hua Hong Semiconductor fell 3 and 6% respectively last Friday, following the report that China waived its retaliatory 125% levy on some of the semiconductor chips imports from US. Baidu also surged 2.3% after launching its Ernie 4.5 Turbo AI model. Other top performers on the Hong Kong index include Lenovo, up 3.4%, and JT Global Express, up 3.5%. Lifting the mood in the Hong Kong market include the Politburo of China, which said last Friday that it will support firms and workers mostly affected by the impact of US tariff and its monetary policy to maintain stability onshore. Shippers are also scaling back bookings out of Asia in response to the global trade tension, with a drop in the number of container vessels headed towards the US West Coast bigger seaports already reflecting the impact of the Trump's China tariffs. For the short-term trading week, the Hang Seng Index gained 2.74%, its second straight weekly gain, fueled by optimism over Beijing move to reduce the negative list of foreign investment firms from 117 to just 106 sectors. The Hang Seng Tech Index also added 1.96% for the trading week and posted their first winning week in more than a month, after 6 consecutive weeks of decline. Back to Singapore, our local market closed the week slightly lower on Friday, which was weighed down by the smaller than expected gain in manufacturing output that outweighed the improvement in sentiment over the US tariff war. The latest March factory output missed private sector economists' forecast of an 8.1% expansion in a Bloomberg poll, and may potentially lead to a downward revision of Singapore Q1 2025 GDP growth from the advanced estimate. Our benchmark index fell 0.21% or 8 points to finish at 3,823 points. Top gainer on the STI last Friday was HongKong Land, up 9.95% or 42 US cents to close at US $4.64. The company had agreed to sell the top 9 floors of One Exchange Square in Hong Kong to the Hong Kong Exchange and Clearing for Hong Kong $6.3 billion. Jardine Matheson also rose 5.76% and Venture added another 1.77% to round out the top 3. At the other end of the STI table, we saw OCBC was the biggest loser last Friday, sliding 3.87% or 64 cents to close at $15.90 after they went ex-dividend. Mapletree Logistics also fell 2.59% and Genting lost 2% to complete the bottom three. The other two local banks also managed modest gains, with DBS up just 0.02% and UOB up 0.34%. For the trading week, the SCI added 2.78% for its second consecutive winning weeks after last week's 5.92% jump. And for this week's technical analysis, let's look at the top gainer on Friday, HongKong Land. Last Friday, HongKong Land share price jumped a massive 42 cents or 9.95% to close at $4.64. The company announced that they agreed to sell the top 9 floors of One Exchange Square to the Hong Kong Exchange and Clearing for 6.3 billion Hong Kong dollars. Market reacted positively to the divestment news, leading to the gains. For the trading week, HongKong Land share price rose more than 12.6%, building on the previous week just 1.7% gain. From the daily chart, we observed that HongKong Land share price has largely been in a range-bound formation since the beginning of the year. The upper bound was kept at the $4.68 level, which was the high on the 1st of April. The low bound was seen around the $4 level, which is around the 200 days moving average, the red line that you see here, now at $4.11. Last Friday, HongKong Land share price also hit a new year-to-date high at $4.70, and that also tested the upper bound of the Bollinger Band over here at $4.64. The next resistance level, if we break the 470 level, will be the $5 level that we saw on the 4th of November. Support could come in at the amber and the blue line, which is the 50 days and 100 days moving average, which is now at $4.35 and $4.37 respectively. Looking at the indicators, the MACD now has a very strong positive reading, indicating the presence of uptrend momentum and suggesting that the uptrend will likely continue further. The latest reading on the RSI is now at 67, which is just 3 points away from the 70-point overbought level. So for investors, we will need to watch out closely for a reversal in the uptrend once we breach the 70-point overbought level mark. On the longer term, looking at the 9 analysts covering HongKong Land, 5 have a strong buy call, 1 has a buy call, and 3 has a hold call. There were no sell recommendations, with the 12-month average target price now at $5.14, with the maximum estimate at $5.50 and a minimum estimate around the $4.80 level. And these are the updates that I have for you this week. If you do find this information useful, do remember to like, share, and subscribe to stay updated with the latest market movement. And I'll see you again next week in the next Technical Insight.